Hey everyone. Today we're going to be talking about Hulu, how we got in the current situation we are right now between Disney and Comcast from an ownership perspective, and then some recent news that's come out that may be hinting about what may be in Hulu's future in terms of ownership and structure and how it goes to market. So just going to start with some background on how we got to where we are. Ultimately, Disney used to own about 30% of Hulu. Fox owned 30%, Comcast owned 30%, and AT&T through Warner Brothers owned 10%. And this has kind of been a joint venture throughout the 2010s. So everyone from a legacy media perspective kind of had a toe in streaming and got to learn and experiment through the know-how of Hulu. And it's really, rubber's really hit the road ever since Disney made that huge investment and acquisition of Fox. So in 2019, Disney's ownership through that acquisition went from 30% to 60%, which essentially gave them the majority ownership of the company, which really enabled the dominoes to fall on kind of getting this business, which is Hulu, from a joint venture to being owned by a single company. Very soon after that, Disney acquired Warner Brothers 10% of Hulu, which Warner Brothers was owned by AT&T at the time, for $1.43 billion. So you can do the quick math. They kind of valued it at that time for $14-15 billion. And now at that point, Disney owned 70% of the business. Comcast owned the remaining 30%. Now, it was obvious through this whole process that Comcast really, really liked Hulu, loved the asset, did not have too much of an alternative streaming play. They were working on Peacock at the time, but it really hasn't developed into anything significant. So Comcast was really not willing to sell their part too willingly, and it kind of festered into these very intense negotiations between Comcast and Disney until ultimately an agreement did take place, but it was kind of an odd agreement. It was not a buyout or anything like that necessarily, but the agreement was for Disney to take complete operational control from a decision-making standpoint. Comcast still has people on the board, so they know what's going on. And Disney paid Comcast $4 billion in cash, which I think they needed at the time. But in addition to that, they bought an option to buy the company, Hulu, in January 2024 for a valuation of $27.5 billion, which Comcast portion would be $9 to $10 billion, or whatever the market value was at that point. Now, the value of streaming companies has seemed to come down from a broad market point of view, and the multiples that people are willing to pay have gone down. So I assume that the amount of money we're talking about is very in line with that minimum acquisition price of $9 to $10 billion. If Disney did decide that they wanted to take over Comcast's 30%, Comcast wouldn't have a choice. They'd have to take the $10 billion and give Disney their 30% stake. Now, since then, a lot of things have changed. Obviously, Disney Plus has blown up into a very reputable and credible and sizable streaming service. Over 100 million users, I think, in North America. So now the need for a streaming service, a separate streaming service rather, is less required from a Disney point of view. However, if anything, it's more required than it ever was from a Comcast point of view, with Peacock not doing too well in terms of just absolute traction, profitability, subscriber growth, stuff like that. So Comcast probably needs Hulu more than Disney needs Hulu. And despite this, Disney has reiterated throughout the years that they expect and plan on acquiring Hulu as soon as possible. They wanted to acquire it before even 2024, but Comcast was reluctant. But as soon as 4 or 5 months ago, Comcast was still saying they expect, unfortunately, Disney to acquire their remaining stake in Hulu. That's what they were planning and projecting. And everyone on the Disney side was kind of saying the same thing. And it's just really interesting to see how fast things change. So going into some language here from Bob Chapek, who is the prior Disney CEO before Iger came back, he mentioned on a couple occasions that he'd love to own Comcast's third of Hulu tomorrow, if possible. And obviously, as they get closer to 2024, the likelihood of them paying a premium or something like that for a deal earlier would diminish. But he was pretty much reaffirming that they completely plan on taking Hulu from Comcast and paying them out in 2024. Here's a bit of a soundbite.
That's right. You mentioned Hulu, and I thought it was interesting because you did say, and you just said as well, you'd love to get to that point earlier, even in 2024, yes, in terms of full control, because it would let you, for example, create the hard bundle that you talk about, frictionless. Any chance, Brian Roberts not far from here, I don't know if you guys want to try and figure something out quicker. Any chance you can get there with them and perhaps have even sort of started to think about talking?
Well, I think as, 24 becomes more and more imminent, probably the chances of a Hail Mary pass coming in that, enables all of us to kind of come to an earlier resolution of this is probably less and less. I would like nothing more than to come up with that solution for an early agreement. But, that takes two parties to come up with something that's mutually agreeable. And I hope.
So you see him say there, he would like nothing more than to get a deal done earlier. While he doesn't say the deal would mean Disney acquiring Comcast stake, that's essentially what he's saying. And then he also mentions it takes two parties to come to an agreement. So it seems like Disney has been wanting to acquire Hulu for quite a while, but Comcast is reluctant to give away their part of it. That's kind of been the general story over the last few years, it appears. And things just completely got turned over during this week's earning call with Bob Iger implying actually he'd be willing to sell Hulu in a reverse deal with Comcast if they're willing to pay for it. Now, just doing some backwards math, if the Hulu's worth about $28 to $30 billion, this would be about $20 billion being paid from Comcast to Disney, which would likely result in share dilution and things like that. But I think Comcast is looking to solve for a much bigger strategic issue than like short-term dilution, which is having a real streaming play in their hands to either pair with Peacock, play with Peacock, however they decide to bring it to life. They'd likely be very interested in that, whatever it takes from finding the money standpoint. So this is really interesting. Something that was a complete 180 from prior leadership and honestly from Bob Iger himself, who was the one who made this deal with Hulu in 2019 to begin with, because he had appetite of owning that streaming business as well. And it's really caught in everyone by surprise. Here's just a couple sound bites from Iger talking about these comments with CNBC after the earnings call.
Not the concern that others would suggest that it is. That said, we are intent on, over time, reducing our debt.
Well, you have a lot of fixed costs. I mean, you get up to leverage of 4 times, let's say, people do get concerned. You have a high fixed cost
I would
business.
imagine that would be at a time when our other business is starting to generate more free cash flow. Mm-hmm. But I'd rather not get more specific about that because we're not really, we're not prepared to give any forward statements in that regard, for instance. But I've talked about general entertainment being undifferentiated. Hulu, by the way, is a very successful platform, and I think a good consumer proposition. But everything's on the table right now. So I'm not going to speculate about whether we're a buyer or a seller of it. But I obviously have suggested that. I'm concerned about undifferentiated general entertainment, and particularly in the competitive landscape that we're operating in. And we're going to look at it very objectively.
All right. So now, all of a sudden, after putting in all these different kinds of deals, paying them $4 billion for the option to buy out their stake in Comcast, after Chapek's kind of gone on the record for years talking about how they want to buy Hulu tomorrow. Now all of a sudden, they're open to selling it, and undifferentiated entertainment is a bad thing and a place that Disney doesn't want to play in a big way. So this was a complete 180 pivot as we look at what's likely to come next year. I'd say the chances now are that Comcast will be acquiring Hulu, not Disney acquiring Hulu. And it's just a matter of when that's going to happen and how much they're going to pay for it. So it'll be really interesting to see how this plays out. As we look at Disney's balance sheet, you kind of heard Iger talk at the beginning there how they don't have that bad of a balance sheet, alluding to that sort of means on how he could acquire it if he wants. Let's just take a look here. The company, their cash flows and EBITDAs are all over the place right now, but their market cap's about $200 billion today. They have, on the debt side, $27 billion in current liabilities, another $45 billion in borrowings, $8 billion in long-term liabilities. So let's call it about $90 billion in current and long-term liabilities. So they do have quite a bit. And especially when you're talking about an acquisition that would cost them another $10 billion and interest rates where they are, they're working hard to de-lever after COVID, not add more and more debt onto their books. So this is an area that I think it's tough. I think it's going to be tough for him to sell to investors who are becoming much more impatient on, starting to return capital back to shareholders and cash flows and stuff like that, on paying $10 billion to once again invest in building up the streaming frontier when they have already been investing billions and billions of dollars a quarter in building up Disney Plus, and they're hungry for their dividend to be turned back on. They want share buybacks back. It's been years and years. It's getting to the point that they continue using COVID as an excuse, but we're in 2023. So I think the better option is likely to take $20 billion from Comcast or a third party, whoever buys Hulu, begin to pay down the debt, invest in other opportunities to accelerate revenue growth and profitability on the business. I just think they don't really have the luxury here in terms of the time, all the activist investor activity that's been going on with Disney, the fact that they just gave Iger another shot at the CEO-ship. They just don't have the time, or it shouldn't be the focus on leveraging the company up more and more and more when, people are running out of patience on the company returning to profitability and returning to providing shareholders with capital returns. So that's kind of my thoughts. If we look at the company here, they've been all over the place the last couple months. Went all the way down to 80, which was about $150 billion market cap. Now up to 110 again, playing at about a $200 billion valuation. So if they sell Hulu for $20 billion, that's 10% of the market cap. They can start to deleverage their balance sheet on, invest in other growth areas, whether that's their parks and entertainment division, more content for their other streaming platforms, whatever it may be, sports rights for ESPN as they look at finding a way to get that business to continue to be the powerhouse in sports it is, both on linear TV and increasingly importantly on streaming. So there's lots of areas this company can invest that money to better position themselves for what they have ahead of them. I really don't like the idea of leveraging up more as their biggest business in linear television continues to have secular decline. I think it just doesn't position them from a position of strength. And I think Hulu is expendable for Disney. So those are my thoughts on the situation. A lot of really interesting things going on here. So I'll be sure to keep a watch on it, but would love to hear your thoughts. Do you think Hulu is something that Disney should not let go of? Do you think it's a good opportunity for them to raise cash? Would love to hear your thoughts in the comments. Once again, if you guys haven't subscribed to the channel, please hit the subscribe button in the bottom corner, and I'll see you guys on the next one.